and welcome to Mint. I'm Ruchita Saxena and joining me today is Shelly Seth Mohile. Shelly, welcome to the show. In today's edition of From the Newsroom, we'll take you through the December auto sales figures that has been announced today by all the companies. And if we look at these figures, majority of auto companies have reported a fall in passenger car sales. So let's understand this from Shelly, who tracks the auto sector for Mint. So Shelly, please tell us, why has there been such a fall despite the fact that many companies have been actually doling out discounts to push up demand?
Yeah, Ruchita, actually every December, if we look at it at the trend, it's typically a weak month for most of the companies, as buyers tend to postpone their purchase decision to the new calendar year. As a result, in order to pump up sales, they dole out freebies, discounts and several schemes. But this year, unlike the previous years, we haven't found too many takers for such schemes. The poor economic sentiments have been weighing on buyers' minds, and we also have seen there have been several rounds of hike as far as petrol prices are concerned. The borrowing costs have been very high. Close to 70% of the cars in India are financed. So that is also one of the key factors that has sort of not encouraged people to go in for a new vehicle.
And since you mentioned the bit about borrowing costs, the RBI credit policy will be announced this month, by the end of this month. So any revision in interest rates at that time could actually help revive demand then?
It all depends on the quantum of cut that happens, that the government does. Car makers have been saying that it's just a mere 0.1% cut in the rates. That is not essentially going to have an impact on the overall borrowing cost. Moreover, banks also need to pass on that cut to the end users, and that will happen at a much later stage. I mean, even if there is a rate cut, it will take a while before it actually reflects on the sale. And unless the cut is at least 100 to 150 basis points, it's unlikely that we'll see the sales turning the corner.
So if we put together all these factors that we just discussed, especially looking at the interest cost scenario, as well as you mentioned that bulk of sales happen through finance, what is the outlook that the companies have shared in terms of ending the financial year with what sort of growth rates, or even the coming months, and what do experts think about the projections given by these companies?
Well, as far as the current financial year is concerned, the industry lobby, SIAM, has already cut its growth forecast to 6 to 8% from 10 to 11% they had earlier. And for the new fiscal as well, the analysts are not very bullish. They have a very negative outlook on the auto stocks and the auto companies, as the interest rates, as we just discussed, are not going to be very favorable, and even the economic revival, the economy, the way it revives, that will also play a very important role. Although there are going to be quite a few new launches, and sales will look up to a certain extent, but we'll see that happening only in the second half of the next year.
Thanks a lot, Shelly, for sharing those insights on the auto sales figures for the month of December. And it looks like that auto sales will remain sluggish even for the consecutive months. For more details, please log on to livemint.com for all the updates on the auto sector.